Assalamu alaikum and welcome to Know and Grow with Mubasher Jillani, where we simplify money and investing for expats in the GCC. You have probably heard the terms mutual fund and ETF. They sound similar, but what's the actual difference? And which one is better for you as an expat investor? Let's break it down in simple way. Both mutual funds and ETFs are investment baskets. They hold a mix of stocks, bonds, or other assets, but the way they work is a little different. A mutual fund is managed by a fund manager. You invest your money and the fund manager decides what to buy and sell inside the fund. It's not traded during the day. The prices are updated once daily after the market closes. An ETF or exchange traded fund is also a basket of investments, but it trades like a stock. You can buy or sell it during the day at real-time prices, and most ETFs are passive. They just follow or track an index like S&P 500 or MSCI Global Index. So here's a quick comparison. Mutual funds, actively managed, priced once daily, often higher fees. ETFs, traded anytime, usually lower fees, more transparent. Now for us, expats in the GCC, ETFs are often a better fit. Why? They're simple, low cost, and easy to access through platforms like Sarwa, Baraka, StashAway, or even international brokers like Interactive Brokers. Plus, many ETFs are Sharia compliant or focused on global markets, giving you diversification. In summary, both mutual funds and ETFs offer diversification, but for flexibility, lower fees, and easy access, ETFs are usually the smarter choice for expats in the GCC. If you found that helpful, hit like, share with a fellow expat, and subscribe to Know and Grow for more videos on investing concepts. See you in the next one. This is Mubasher Jillani helping you know and grow one money concept at a time.